January 1st, 2026 will be remembered as the day the wealth transfer became visible, not predicted, not theorized, observable fact. I'm reporting from Cambodia, positioned between the Eastern and Western economic systems, and what I'm seeing from this neutral ground is something mainstream media won't tell you. Let me show you exactly what happened on January 1st, using only verified, documentable facts. Event 1. Silver supply restriction. China implemented export licensing requirements for silver. 60 to 70% of global silver refining capacity now requires government approval to export. This isn't speculation. It's official policy that took effect January 1st. Why does this matter? Every smartphone needs 0.34 grams of silver. Every solar panel needs 20 grams. Every electric vehicle needs 25 to 50 grams. You cannot substitute it. Copper oxidizes and fails. Gold costs 90 times more. There is no alternative. China just restricted the one material that modern technology cannot function without. Event 2. Yuan Index Adjustment. On the same day, China reduced the US dollar's weight in their Yuan exchange rate index from 18.9% to 18.3%. 0.6% doesn't sound dramatic, but this is the continuation of a 15-year pattern. In 2010, the yuan settled less than 1% of China's trade. By March 2024, it was 53%. The dollar dropped from 83% to 43%. Small adjustments compound over time. The direction is clear. Event 3. Physical versus paper price split. Here's where it gets interesting. On January 2nd, I verified something shocking. Physical silver in Tokyo, $130 per ounce. Paper silver on COMEX, $76 per ounce. Same metal, same day. 70% price difference. Why? Because you can't actually get silver at the paper price when supply is restricted. The physical market is pricing in scarcity. The futures market is pricing in contracts that might never deliver actual metal. This is the observer effect I keep talking about. Western trader looking at COMEX. Silver is $76. Market is calm. Everything is normal. Tokyo manufacturer trying to buy silver. Silver costs $130. We're paying massive premiums. Supply is constrained. Same reality. Completely different observations depending on where you're standing. And from Cambodia, positioned between both systems, I see both perspectives simultaneously. The narrative you're hearing. Finance YouTubers are saying China just killed the dollar. The petrodollar is dead. Hyperinflation is coming. Mainstream media is saying minor policy adjustments, normal market fluctuations, nothing to worry about. Both are missing what's actually happening. This isn't the death of the dollar. That's sensational and unprovable. This is the gradual, methodical reorganization of global trade and currency relationships. China has been preparing for this for 15 years, accumulating gold, building yuan payment systems, establishing currency swap lines, reducing dollar exposure point by point. January 1st wasn't a surprise attack. It was the continuation of a documented long-term strategy. The wealth transfer. Here's what wealth transfer actually means. Physical assets, silver, gold, strategic commodities, are moving east. Financial assets, dollars, treasury bonds, paper contracts, are staying west. When the physical economy and the financial economy diverge, which one represents real wealth? If you hold dollars, you hold claims on future payments. If you hold silver, you hold the material that enables modern technology. One is a promise. One is physical reality. Tokyo buyers understand this. They're paying $130 for physical silver today because they know they'll need it in 90 days when their stockpiles run out, and they can't get more at any price. COMEX traders don't understand this yet. They're still trading paper contracts, assuming delivery is possible at $76. The gap between these two observations is where the wealth transfer happens. My position in Cambodia. Why am I covering this from Cambodia? Because I'm outside both systems. I can observe the Western narrative and the Eastern reality without being captured by either. Cambodia uses US dollars for most transactions, but is increasingly tied to Chinese investment and Yuan-denominated trade. I see American businesses operating here. I see Chinese manufacturing supply chains. I see the transition happening in real time at street level. This gives me a perspective that someone in New York or Shanghai cannot have. I'm not cheerleading for either side. I'm documenting what I observe. And what I observe is the system is reorganizing. The changes are measurable. The timeline is compressing. What happens next? I'll be creating content daily documenting this transition, not predictions. Real-time reporting on observable facts, physical silver premiums, UN adoption rates, supply chain disruptions, currency index adjustments, all documentable data, no conspiracy theories, no sensationalism, just one observer positioned between two systems showing you both perspectives. If you want to understand what's actually happening as the global economic order shifts, subscribe and follow along. This is the observer effect. Same events, different observations documented from neutral ground. I'm Lawrence reporting from Cambodia.